A lot of big things to cover after the market now on Friday for uranium stocks. UEC, they put in a far superior bid for UEX than Denison today. We're going to talk about that, what it means. I'm going to show you a lot of the past data from all three of the companies and where they're at right now and where this could go. We're also going to talk about LEU, Centrus Energy. They actually had a presentation today. They beat earnings. It's up 17% and very big signals for the overall uranium market. We're going to go into detail with that. Also, Energy Fuels just had their earnings after hours. We're going to talk about their earnings and we're going to look at the overall uranium market. Things are looking very good. A lot of the uranium stocks were up today. The overall market is down. Now, please hit that like and subscribe button below because I take all this time to show you guys everything, keep you updated. So today, all the bigger uranium stocks did very well today. We saw UEC still close over about the 420 area, up almost 3%. Cameco about 3.5%. Energy Fuels 4%. And LEU, what I was talking about yesterday, they're up 17%. Now, the presentation they gave today, I'm going to go through it with you guys. There's a lot of great information you're not really going to see from any uranium company out there, but very, very positive. A lot of competitions coming for those small modular reactors, but very positive things for those stocks today. Now, the first thing we're going to cover here is UEC, and I really do like him here. I'm telling you, this guy went from, everyone in 2020 pretty much, giving him a lot of hate to today, really such an MVP, tweets out the most for a lot of CEOs, which in this market, if you're not promoting, then the stock's not going to do very well. Now, UEC put in a far superior bid. Here today said, after careful analysis and consideration, we firmly believe the revised UEC offer represents a value creating opportunity for UEC and UEX shareholders. We remain disciplined with respect to pursuing accretive growth. The revised UEC offer strikes a balance of a modest increase in the exchange ratio while doubling UEC's uranium resources at only 14.2% dilution to our outstanding shares. This transaction highlights UEC's sector-leading strategy as the fastest-growing pure-play unhedged uranium company and will create the largest diversified North American-focused uranium company. Over 93.7% voted in favor and the positive price performance for UEC. Looking to close the transaction post UEX shareholder vote on August 9th. Really quickly, I'm very glad for what's going on. I want to show you what I'm going to be presenting to you today. A bunch of great information, a lot of stuff to talk about. Now, the first thing here in this section, we'll talk about in a minute, we're comparing all three of these stocks, Denison, UEX, and UEC, to their 2006 and 2007 peak highs, everything, pounds, market cap, because a lot of people have been saying some of the stocks out there, they've been asking what they did then and how they could grow. Now, these are completely different companies now. UEC is a far better company. Not only did this stock trade on the OTCBB, if you guys traded back then, which is the pretty much worst of the worst. Back then, now New York Stock Exchange. So far bigger difference. Now, the UEC offer is 49 cents Canadian to UEX shareholders, and that's far superior to what Denison put out there. Now, UEC is not afraid to, put out the numbers. And, out of all of the voters, 93.7% voting in favor of the UEC transaction, including my good friend Lewis Morgan. He owns 2% of the entire company of UEX. And I just talked to him earlier. I called him. And he hopes that the shareholders will again vote in favor for going with UEC. Now, we've seen the share price, obviously, of UEC do a lot better. And we're going to get into that why. There's a big difference why. And if you're a Denison shareholder, it doesn't mean that the company's bad. Remember, UEC is going to, be working with, in a sense, Denison, because a lot of those assets that were JCU assets and they split that in half. A lot of those assets were JCU. A lot of those assets that UEX had from JCU is also in works with Denison. That's why Denison wanted it. So these joint ventures, it's not like they're an enemy. This is a uranium. Now Denison did have this coming. And this is no, in a sense, disrespect to anyone, but they did the same thing to UEX, and it's just business. Remember this. At the end of the day, it's just business. Because they're unhedged, they are, open to these long-term contracts, and they have double the amount of physical pounds than Denison does, 5 million pounds. And this is going to really help them, I think, when they start contracting and having these assets. And one of the big things with the merger is the strong joint venture. You're partnering with Cameco, Orano, And remember, these companies already have, a lot of these companies already have big assets, right? Just because, say, Cameco has this joint venture, it doesn't mean that they're going to be able to just loan out all this money. UEC is going to pick up a lot of that slack, especially for some of these projects if they get those into production during this uranium bull market. They're going to need all the help they can get. There is 700 million pounds of contracting coming. So next, this is the Uranium Sheet. If you want access to this, there's a link in the description below. If you already got access, it's at the tabs at the bottom for anyone who has access. All these tabs are where it's at. So if we're looking at the previous uranium bull market, I have that here during its peak for each of these three companies. So Denison, UEX, and UEC. Now UEC used to be, like I said, on the OTC BB. It was URME. Its market cap near the peak was around 114 million, but this was 2006. But by 2007, when that really ran, obviously all the uranium stocks went up and hit about $9.35. So UEC only had about 25 million pounds at the peak. Now they will have, with this merger, 307 million pounds and 5 million pounds of physical that's worth $1 billion at $200 uranium. And their EV resources is about $6.60. Cash is close to about $500 million if you add up their physical uranium as well. That's about $60. And Denison sold 40,000 pounds, about 60. So that's what we'll go off of right now. But UEC now, compared to then, it's just a far superior company. I mean, look at the amount of uranium it had then. Look at what the price got to. Look at how much they'll have with UEX when they merge. 307 million. They think about them actually getting into full production, millions and millions of pounds per year for years. And the physical uranium that they have, I think they'll probably end up buying more. This is just a far superior company than it was back then. And it is not even anywhere close to where it's going to peak. Now UEX, back in 2006, they only had 65 million pounds back then, right? Now you look at them, they've got about 149 million pounds. Pretty good for what the price of the stock is right now. Around what, UEC is going to be offering. This company with these assets merging 307 million, it's going to get very crazy. Now Denison, if you look at Denison now, the share structure, the market cap's close to $1 billion. The float, after everything's all said and done, fully diluted, it's almost 900 million. This is the reason here. 900 million. Look at this. Okay. That's a lot of shares. And I don't like their share structure. That's one thing. One of the reasons I don't like the way the stock trades, and that's your reason right there. They failed to, with record market leading volume last year, failed to really hold $2, and now they're back to $1. And they're going to dilute more if they, were trying to get this. It's not going to be too good for shareholders. I'm sure shareholders aren't very happy. They have about 250 million if you add up everything. Now, we're not adding up shares in other companies. UEC also has, Anfield, other shares. It's like 76 million. We're not adding those up. This is just for their physical uranium and cash on hand, which obviously Denison has less, almost, $250 million less. Denison being a Canadian company, how's the US dollar going to compare? Those are certain things you got to look at. And if you want to look at the market cap for Denison back at the peak, and this is about 2006, it was about close to 400 million. And the float, look at the float back then. That was the float, okay? People look at the charts and they're like, wow, look at the prices of these stocks. The float was 30 million during this time. They have almost 900 million now, okay? That's your reason. But the stock got up to 1445. Doesn't mean that they are today. No, they have a good amount of pounds. They've got those, their assets are good. They've got a lot of joint ventures. So we'll see where things go. But if you're just comparing, I think Denison is probably a little overvalued. And the share structure kind of reflects that. We're going into the recession. These companies, they're going to be liable for all those assets, especially if, company like Cameco, Orano wants to get things going. They're going to have to put up cash, means they're going to have to dilute. So a company that is unhedged, it's going to probably be better for a company like UEC. My buddy Lewis Morgan owns 2% of the entire company, UEX. He feels pretty much the same way. But let me know in the comments below. Are you a shareholder of both? What do you think about it? If you want to look at earnings today, now Energy Fuels reported their earnings. They have a robust 134 million of working capital. That's 86 million of cash and cash equivalent, 11.8 million of marketable securities, 28.6 million of inventory, and no short-term or long-term debt. And current commodity prices, that's with uranium the way it is. Their inventory has a value of $43.9 million. And then during the quarter ended, there was a loss, $18.1 million, which included the non-cash mark-to-market decrease in the value of their investments, accounted for a fair value of about $13.4 million. That's understandable. Uranium price has been going up and down. The company entered into 3 long-term uranium sales contracts with utilities based on quantities under these contracts, total of 3 million pounds, with deliveries to occur during the 2023 to 2030 time periods. Okay, long-term contracts. If the buyers exercise all options, total delivery quantities could increase to as much as 4.2 million pounds. Annual quantities vary each year, with lower delivery quantities in the early years and higher quantities in the later years. That's kind of how the contracting works. Contract pricing has a fixed price component, fully indexed to inflation, which is good, and a spot market component, along with floor and ceiling prices. This is smart. The company expects to fulfill deliveries during the early years of these contracts, so starting in the next year, from its significant existing produced inventories. All these physical pounds that they hold, that's how they usually start these contracts. That's why it's great for UEC to have 5 million pounds on hand, because it's already mined, it's already ready to go. And if they have any issues, they have that backup. We saw Paladin do the same thing. They had issues when they got their mines up. They went in the spot market, bought 250,000 pounds of uranium to deliver into that, because Langer Heinrich had issues in 2006. In June of 2002, the DOE issued a request, that's the RFP, to purchase uranium U308 to the new uranium reserve. The DOE states that they expect to purchase up to 1 million pounds of U308 from up to 4 qualified uranium producers, U.S. producers. So obviously it's going to probably be UEC, Energy Fuels, probably Peninsula Energy, and I'll let you guys guess the 4th one. So uranium must be physically located at Honeywell's Metropolis Works conversion facility. Obviously, the U.S. converter. Energy Fuels believes it meets all the qualifications to supply the reserve, and the company currently holds only 692,000 pounds of U308 at the U.S. converter. The company has submitted the bid to sell this. Okay, so this is really good. I like this. This is great for U.S. producers. I like the stock. I like the management, and I think big things are coming. Now, we were talking about earlier, I just want to show you the fully diluted shares, 890 million. This is Denison, by the way. This is their reserve and resources. Go ahead and pause the video if you want to look at it. But like I said, it's not a bad company. All uranium stocks aren't going to trade the same because of share structure, volume, float, the way if management, is hidden behind the scenes. You got to promote in this industry. You got to promote in this market now, especially in a recession. I have a lot of really nice information that Centrus Energy, that was up 17% today. Centrus Energy put out in their presentation. Now look at these just in the last month. Look at the bullish news. The world's embracing nuclear energy. Asia goes nuclear as climate. Ukraine banishes memory of Fukushima. Japan hopes to restart 4 more nuclear reactors by winter, probably 9. South Korea looks to nuclear expansion and bid to meet climate targets. Europe calls for gas and nuclear energy, calling nuclear energy green. Nuclear power gets a new push in the U.S., winning converters. Nuclear power gets a new push in U.S. Look at this. Economist, how Russia war could revive America's uranium industry. U.S. Energy Department advances $6 billion in nuclear plant program. France bets on nuclear power to fight the climate change. Nuclear power gets a fresh look as nations chase climate goals. And is nuclear power part of the climate solution? There's a lot of competition, and we're going to look at this. So the NRC, there's pre-applications. Look at all of the reactors, and a lot of these use HALEU versus SMR, that company, NuScale. NRC pre-application. Look at all these, okay? And then you see the NRC licensing review as well. So there are a lot, 9 out of 10 reactors selected by the DOE Energy Advanced Reactor Demonstration. Most of those are going to use HALEU. the amount of companies. These are very big companies. I've been saying this for a while. There's a lot of competition. Competition is good. Right now, I would rather be myself in a company fueling most of the reactors. And LEU pretty much has a monopoly on that now. And the opportunity is massive. Absence of this Russian supply, this enriched SWU, this enrichment deficit will be 15 million SWU a year, equivalent to the entire annual requirements of either the US or Europe. US utilities purchased 4 million pounds of Russian origin SWU in 2021. That's 28% of the US demand. They bought Russian, right? This transition away from Russia requires major public-private investment and will take years to accomplish. So that $4.3 billion Biden enrichment has to come ASAP. Has to. And this bill passing tomorrow, if they pass this climate bill, this inflation bill, tomorrow we're likely to see that $4.3 billion come, I think, very quickly. And as I said right here, proposed U.S. Department of Energy initiative would offer long-term offtake commitments for LEU and HALEU. At least a portion of the offtake may require U.S. enrichment technology. Centrus AC100 is the only deployment-ready U.S. technology. This has to be, remember, U.S. No other company can do it. They got a monopoly, okay? And what do you expect from a company that is a descendant of the Manhattan Project? This was the Manhattan Project. The U.S. seeks $4.3 billion for uranium to wean off Russian supply. What else are we going to do? Are we going to rely on Russia? Let me know in the comments below. They have $1 billion order book. We talked about that yesterday before the stock ran up 17%. Most diversified supplier of enriched uranium, leading customers including Fortune 500 utilities, business relationship with 35 nuclear operations. Now remember, this company added $135 million in new contracts, okay? So obviously utilities, they're not scared that they can't get a lot of their uranium, their enrichment. And remember, they also get their enrichment from Orano. They get it from France as well. It's not just Russia. Now Russia, if they ban the exports of uranium or the US bans the imports of Russian uranium, we could see some very big volatility on the down and maybe back upside on the stock. So it has been on my radar. I've been buying the stock since $4 and trading it. It went to $88. Now they are uniquely positioned because as you guys know, the last US owned enrichment plant shut down in 2013, leaving America without a national security enrichment capacity for the first time since the 40s. And then non-proliferation agreement prohibits the use of foreign enriched technology for national security. A domestic technology is required. You guys understand what that means. This is the only company, Centrus AC100 Centrifuge, the only deployable ready U.S. technology capable of meeting national security requirements. U.S. Okay. Competitive advantage. Centrus offers an integrated solution for commercial and national security needs. A monopoly. We got to get through this Russian uranium ban. They could get a waiver. That's what I've been saying before. But look at how many of these companies are going to produce small modular reactors. It's going to get insane. Going to be very insane. And remember, this HALEU is going to be phenomenal for nuclear energy. 750 grams of HALEU, 3 tablespoons can meet your entire electricity needs for life. The overall stock market was trashed today, right? Tesla was down 6.6%. The stocks, the technicals are looking really good. A lot of you asked me today, we were talking in the Discord a bunch about, day trading and swing trading, because that's what I'm really about to get back into doing. Previous videos a couple months ago, I was really going hard on day and swing trading, and I wasn't making as many videos on here. At one point, first in the world in the stock investing championship. So I look to get back. As of the numbers now, I'm probably around 4th place. I have not reported yet, because now that we're in the second part of the year, it's more competitive. Uranium stocks, they, by the end of this year, if they do what they are going to do, in my opinion, I'm going to be day trading it and swing trading them like crazy. I want to establish long-term positions, but as of right now, with the volatility, there is so much to be made. I'm looking forward to doing the day trading and swing trading. So you guys, what do you think about it? Please give me your comments below. What do you think about the earnings? What do you think about UEC, Denison, UEX, this merger? What's uranium overall looking like? What's the market looking like? All this negative news I reported in my last video, some of the negative news from France and Ukraine about nuclear, is it going to hurt it? In my opinion, I don't think it is. You guys let me know below. If you guys want to check out the Discord and all those sheets and all that data, the link is in the description below. Thank you so much for the support, and until next time.